Are you starting to look for a house and wondering where all your money is going when purchasing the house? Like, what are those mysterious closing costs? And why are they thousands of dollars? I'm going to break down a real home buyer final statement, line by line, so you know exactly what you're paying for. Hey everybody, I'm Jerry Norman with Oregon Life Homes. I'm a real estate agent here in the Roseburg area and been helping buyers and sellers for the last few years. I absolutely love it. And today I'm going to walk you through line by line the actual closing statement and break down what these closing costs are. If you're a first-time home buyer or just curious where that money is going, this video is going to break down what nobody else is going to show you in plain English. And stick around to the end because I am going to show you a few tips to help you lower some of those costs when it's your turn to buy. So with that, let's get on with the video. First off, we've got two columns, debits on the left and credits on the right. Debits are things that the buyer has to pay, and credits are things to help pay those costs, like your loan and seller contributions. The goal is to make sure that the credits coming in match the debits going out. So, first off, financial consideration. Now, this is an actual home purchase that happened recently. I have left the names and personal information out. Sale of the property was $335,000. That's what the offer was. So let's break it all down. Sale of the property, $335,000. This is the total price that the buyer agreed to pay. Next will be the earnest money, which they put up once the offer was accepted. And the earnest money is like a good faith to show that they are interested and have money that they are serious about buying. And then that gets credited at the end. Usually comes off the closing costs or the down payment. Next is the loan amount. Now this one actually has two different loans. It's actually a second loan, which helps towards closing costs. It's a first-time home buyer program where basically that second loan has a small monthly payment to help with the closing costs. So the main loan is $328,000, and then the second loan is $13,000. And then in the offer is the seller credits that we are asking for to help pay for these closing costs. And you're going to see how that works out towards the end of this. Now the seller credits, this is money that the seller has agreed to pay, which is written in the offer and part of the negotiations to get the offer accepted. Next is prorations of county taxes. The seller has already paid property taxes up to a certain date. So this is the amount of money that the buyer is going to reimburse the seller for their seller paid taxes. And in this case, they've broken it down into days. So they're paying 76 days, which comes out to $306. Next is the origination fee. This is charged by the lender to set up the loan. Next is the processing fee, which covers paperwork and the administration side of the loan. Next is the underwriting fee. This is charged by the lender to evaluate you as a borrower and see if you are worth the risk to give this money to as a loan. Next is the appraisal cost of $750, which is paid by the buyer, typically outside of this. So it was paid directly to the appraiser. Next is the credit reporting fee, pretty basic, which covers the cost to pull your credit and to verify your credit and employment. Next is the flood certification, and that's basically to ensure that the home is not in a risk of the flood zone. Next is the tax service fee, which ensures that taxes are paid and gets tracked properly. Then you have a compliance fee, which is another lender admin fee, which is sometimes required by the investors of the lender. Next is the FHA upfront mortgage insurance premium, which is basically mortgage insurance to help protect the lender. Then the MERS registration fee. It registers your mortgage in a national database for tracking. Then there's the program fee. This is not always on these final statements, and what this one is for the second loan and the first-time home buyer assistance. This one is the prepaid interest. So closing was on 4/16 to 5/1. So closings happen on 4/16 to 5/1. So this is the interest up until that point. So it's the prepaid interest for the half of the month of April to the 1st of May. And then the rest of the insurance is added on for the full entire month. So this particular buyer bought the house on 4/16, and so they're charged the interest up until May 1st, and then the interest starts from May 1st till the end of May, and their first payment is not due until June 1st. So a way to save a little bit on your prepaid interest is close at the end of the month. Now, if you close on the 30th or the 31st, then your next payment is not going to be due. So for example, in this one, if they were to close on the last day of April, their first mortgage payment would not be due until June, but they would only have to pay $58.58 per day in interest, which would be 1 day. So that's a good way to save a little bit of money, is close at the end of the month. Now, if you close at the 1st or 2nd of the month, then you're going to pay interest for the entire month. However, you're not going to need to make a payment until the first full month. So for example, if this particular buyer was to close on May 2nd, they would be paying $58 per day in interest for the whole month of May. Their first mortgage payment would not be due until the 1st of July. So that's how the prepaid interest works. And then we'll scroll down a little bit, bring this to the next page. So the next one is the homeowner's insurance. This is prepaid for the first few months. Next off will be the prepaid property taxes. So the lender will collect the property taxes and hold it in an escrow account. And so this is going to be the first 10 months of property taxes. Property taxes are due once a year. Your lender will hold out a certain amount of money and make the property taxes payment each year. So you don't have to worry about your property taxes. It's paid with your monthly payment in your mortgage. The same thing is going to work for insurance, and we're going to get to that here in a minute. So that is your prepaid insurance. Then there's an aggregate adjustment, just a lender balancing off some of the numbers off of some of those credits to make everything balance out. So they give a credit back. That's going to come off at the end. Next is the new loan charges. This is going to be for the second loan. So that's going to be the interest per day, and that's going to be that amount. So everything up above was lender-based charges. Now everything is going to be title and escrow charges. If you are going through a mortgage lender, there's pretty much no way to get out of some of those fees. Sometimes they're discounted, but very rarely. Now we get into the title and escrow. There's really no way to get out of these fees. There's no reason why you wouldn't want to use an escrow company to make sure that the sale is done correctly. They ensure that the property is actually marketable. There's an insurance to that, and that they cover that, and we're going to get into that here in a minute. So basically, this is this concurrent junior loan escrow. This is because there's a second loan, so there's an extra charge for the paperwork and the tracking. Next is the title and escrow fee. This is paid to the title company for handling and maintaining the transaction. Next is the title and lender insurance. And what this does, it protects the lender if somebody challenges the ownership of the property. The environmental protection lien, which is nothing in this case. These are policy endorsements that protect against specific issues like environmental liens or building code violations. Next is the title recording. This pays for the filing of the deed through the county. Now we get to the government charges. So we've got the recording fees, which is this and this. This is what the county charges to record the deed and mortgage documents. And because there's two loans, there's a second loan, that's why there's two charges, this one and this one. And then as I mentioned before, with the taxes, where the lender will take money up front to make sure that your taxes are paid, they do the same with insurance. And so that's what this 12-month homeowner's insurance premium is. It's collected up front, so home insurance is paid for the full year. And so that's paid up front. And then as you make your monthly payments, they're going to take a little bit of that and reimburse towards that. So that money will stay continuous. And so every time your home insurance is due, it's paid up front. And so that brings us out to total debits of $353.56 and total credits of $353.46. So because of the extra seller credits at the beginning, the buyer at closing gets back $389. And so that is where everything goes. So this price right here, $353.46, that is the total amount paid. So the $335 purchase price plus all the closing costs and everything involved comes out to $353. Now, remember, there was seller credits paid, and so the buyer didn't really come out all this much. Basically, what the buyer out of pocket to get into this home was the appraisal of $750 and the earnest money of $1,500 plus their inspections. So that's pretty much what they came out of pocket. Knowing what all these fees mean can save you a lot of surprises at the closing table and sometimes even help you negotiate better deals. So here's a tip. Always ask your lender for a loan estimate before you go under contract or before you make the offer. It'll break down the fees so you're not blindsided by it later. That way you know what to expect throughout the whole process. And if you found this breakdown useful, hit that subscribe button because I do a lot of these about living, working, and playing here in Roseburg and what it's like to buy or sell your home. So hit that subscribe button, hit that like button, and if you got any questions, leave me a comment down below. And if you got any questions about moving to Roseburg, all my contact info is in the description below and right there. Also, check out these other videos. One right there, one right there. And we'll talk to you guys later. Have a great day. Bye.